The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States. Now, what is this action, which is very technical, what does it mean for you? Let me lay to rest the bugaboo of what is called devaluation. If you want to buy a foreign car or take a trip abroad, market conditions may cause your dollar to buy slightly less. But if you are among the overwhelming majority of Americans who buy American-made products in America, your dollar will be worth just as much tomorrow as it is today. The effect of this action, in other words, will be to stabilize the dollar. Now, this action will not win us any friends among the international money traders. But our primary concern is with the American workers and with fair competition around the world. To our friends abroad, including the many responsible members of the international banking community who are dedicated to stability and the flow of trade, I give this assurance. The United States has always been and will continue to be a forward-looking and trustworthy trading partner. In full cooperation with the International Monetary Fund and those who trade with us, we will press for the necessary reforms to set up an urgently needed new international monetary system. Stability and equal treatment is in everybody's best interest.
Conversations with various representatives of China, I believe that will all work out very well for everybody. China, Japan, the United States, and everybody in the region. As far as the currency devaluations, I've been complaining about that for a long time. And I believe that we will all eventually, and probably very much sooner than a lot of people understand or think, we will be all at a level playing field. Because that's the only way it's fair. That's the only way that you can fairly compete in trade and other things.
I could. Well, let me, first of all, gold was not always money. Before we had money, we had barter. I mean, money was an invention, and it was an invention that led to an incredible increase in efficiencies for trade, right? Because prior to money, and when you just have straight barter, it was very difficult. If you, made chairs and you wanted a belt, well, you had to find a guy that made belts who liked your chairs, right? I mean, it's very difficult to do. But man figured out that, hey, we can have one commodity that we can just trade. So if I'm a chair maker, I don't have to trade my chairs. I can have another commodity, and I can exchange that commodity for what I want. And there was a lot of competition over the years, but metal seemed to be the most efficient form of money, and gold was the best metal to use. And gold functioned for money for thousands of years. Governments got involved with paper, but what initially gave paper its value was the gold that stood behind it. I mean, nobody was dumb enough to just accept a piece of paper with a number on it and think it had any value. The reason that people would accept a piece of paper was because it was backed by gold. So you really didn't want the paper, you wanted the gold that was behind the paper. But paper was just a more convenient way for you to transfer your gold. Because if I had a big stack of gold at a blacksmith, rather than lug it around, I could have a receipt of, a piece of currency is basically an IOU for gold. It's that's why, like dollars were Federal Reserve notes. They were notes because they were promises to pay gold. And so paper money made transacting in gold more efficient. It made it easier. Now, eventually governments corrupted that because they took away the gold backing, and we now have just fiat money, which is just pieces of paper backed by nothing. But that doesn't really work as money because you don't have the store of value. One of the reasons that gold works so well as money is because it's a reliable store of value. If I have an ounce of gold today, 10 years from now, 50 years from now, 100 years from now, it's an ounce of gold. I mean, people can relate prices, you can have loans, you can, contract, you can do all sorts of things with gold because it's a reliable store of value. People are doing that today with dollars or euros or yen, despite the fact that they're not a real reliable store of value in the long run. But in the short run, their store of value is a little bit more reliable, right? The odds of the dollar having value in a week are pretty high. In a year, still pretty good. 10 years, 50 years, 100 years, probably nothing, right?
Commissioner, Mr. President, I rise again, I'm afraid, to make the same old hoary speech that I've been making here for several years, and that is, it is my opinion that you do not really understand the concept of banking. All the banks are broke. Bank Santander, Deutsche Bank, Royal Bank of Scotland, they're all broke. And why are they broke? It isn't an act of God. It isn't some sort of tsunami. They're broke because we have a system called fractional reserve banking, which means that banks can lend money that they don't actually have. It's a criminal scandal, and it's been going on for too long. To add to that problem, you have moral hazard, a very significant moral hazard from the political sphere. And most of the problem starts in politics and central banks, which are part of the same political system. We have counterfeiting, sometimes called quantitative easing, but counterfeiting by any other name. The artificial printing of money, which if any ordinary person did, they'd go to prison for a very long time. And yet governments and central banks do it all the time. Central banks repress the amount of interest that rates are, so we don't have the real cost of money. And yet we blame the real retail banks for manipulating LIBOR. The sheer effrontery of this is quite astonishing. It's central banks that manipulate interest rates, Commissioner. And plus, underneath all this, we talk loosely, in a rather cavalier fashion, do we not, about deposit guarantees. So when banks go broke through their own incompetence and chicanery, the taxpayer picks up the tab. It's theft from the taxpayer. And until we start sending bankers, and I include central bankers and politicians, to prison for this outrage, it will continue.
As a small business, you rely on your bank to manage deposits, bills, loans, and so much more. And if you're like most small businesses, you also rely on your bank to process wire transfers to pay workers, suppliers, or manufacturers overseas. But in this case, it's a reliance that's hurting both your business relationships and bottom line. That's because banks normally use SWIFT to process these transactions. Created in the early 1970s and showing its age, SWIFT enables wire transfers via a global network of intermediary banks. Using SWIFT is costly, and, despite its name, the process is anything but speedy. First, you're required to manually input the receiver's banking details. Then, you select their currency, which triggers a foreign exchange rate that's typically 4 to 6% above the actual rate. Once the transfer is initiated, your funds get routed through multiple intermediary banks, costing you more time and money, while putting transfers at risk of being lost or delayed. At the end of it all, they've been forced to wait, you've been hit with serious fees, and it's rinse, wash, repeat the next time you go to pay them.
Your stance on the gold standard. Would returning to gold standard help the U.S. economy? Can you talk a little about your thoughts on that?
Well, I would say I don't see it so much as returning, but more of a back to the future.
Okay.
I think that what a gold standard stands for is monetary discipline for its own sake. That is, if money is supposed to be a unit of account and a reliable measure and a dependable store of value, it really shouldn't be subject to who's the chairman of the Federal Reserve. And I think that money needs to be stable and provide the foundation for productive economic growth. And when money is just a variable that financial markets toss around, or it's part of a derivatives formula, or it's part of someone speculating on currencies, it's not serving private sector in the sense of providing that reliable unit of account so you can make plans. And under a gold standard, you did have that stability, and I think that's what's missing. And so I like the idea of a gold standard. I mean, it could be used in a very cryptocurrency way. The point is, do you have a unified money system so that when you talk about the international marketplace, everyone is playing on a level monetary playing field? And it's very important to have a rules-based approach, and that's why I'm advocating that we need to look at the virtues of a gold standard and try to come up with something much closer to matching those, and then I think we would have more solid economic growth.
With central bank stimulus weakening the dollar and gold being only about $100 short of its all-time high, a question has started to arise: can gold replace the US dollar as the world's reserve currency? The dollar has enjoyed this status for decades, but since it detached itself from the gold standard in 1971, it's essentially consistently weakened on a macro level. Confidence in the U.S. government and the political system in the U.S. is one of the keys, and gold doesn't have that issue of a loss of confidence. But what it does have is a problem with transportability. That's why it's more likely that a currency backed in gold, or even a digital asset backed in physical gold, could potentially replace the dollar much more easily than the actual physical bar of gold could.
Thank you for inviting me to participate in your forum. I wish I could be there in person to take part in the discussions you'll have over the next few days. If we were building a financial system from scratch today, we'd do it on a digital platform. Digital can lower the cost of a range of transactions by as much as 90%, providing nearly universal access to innovative financial products and services. Unfortunately, we don't have that luxury of starting from scratch, so we have to show not only the vision to plan for this better digital future, but also the wisdom to manage a secure transition from the current system. It's a big responsibility, but with more than 2.5 billion people not able to get at formal financial services, the opportunity compels us to do it. Poor people do have assets, their intellect, their labor, their savings. The problem is that they don't have financial tools to capitalize on these resources. They're trapped in an inefficient cash economy that robs them of opportunities to insure themselves against risk, invest in their productivity, and ultimately to help lift them out of poverty. The vision, the Alliance for Financial Inclusion, laid out in the Maya Declaration is a paradigm shift in the way the poor are able to approach life, seizing control of it rather than trying to manage it. Success will require a paradigm shift in the way we conceive of the financial system, from cash-based to digital. Paradigm shifts are hard work. Individually, as regulators, and together as members of the Alliance for Financial Inclusion, you will have to confront problems that didn't exist before. How should retailers, telecommunications companies, and banks work together? How does innovation function in a financial system that also needs to be safe and secure? How can the poor provide input about what new products and services would meet their unique needs? Innovations like vaccines and high-yielding crops have changed the future for billions of people. You're on the cusp of another breakthrough innovation, including the poorest in a financial system that increases instead of limiting the value of their assets. Transforming the underlying economics of financial services through digital currency will help those who live in poverty directly. It will also support a host of other development activities, including health and agriculture. I see two priorities for the immediate future. First, we need to drive the policy changes to make sure the poor can get engaged at this level. And second, we need a measurement system that tracks the progress towards drawing people in, not just to have accounts, but to really benefit from financial activity.
You know, right now today, based on your perspective, what are you telling people? What are what's coming next? What's really happening now? And how can someone watching this utilize that based on your unique perspective?
Sure. There are a couple of big themes, and I'll try to keep them concise, but then we can expand if you like. The biggest thing going on in the world, but it's slow motion, so it's not. I'll describe it for you, but don't think that the world's going to come to an end tomorrow. It's not. At least I don't expect it. It's funny when you're in my position. People, because I've got the books and I'm active on Twitter and I'm on TV and I'm kind of out there a lot, but people love to put words in your mouth. They'll say, well, Jim Rickard says that, world's coming to an end, sell everything, buy gold. Well, I've never said any of those things. I don't believe any of those things. I don't believe the world's coming to an end. We may go through financial crashes and panics and you come out the other side and the world is different. Yeah.
But we do have the potential to overcome disease and poverty, and I'm going to talk about those issues if we have the will. Kevin Kelly talked about the acceleration of technology. That's been a strong interest of mine and a theme that I've developed for some 30 years. I realized that my technologies had to make sense when I finished the project, that invariably the world was a different place when I would introduce a technology. And I noticed that most inventions fail, not because the R&D department can't get it to work. If you look at most business plans, they will actually succeed if given the opportunity to build what they say they're going to build. And 90% of those projects or more will fail because the timing is wrong. Not all the enabling factors will be in place when they're needed. So I began to be an ardent student of technology trends and track where technology would be at different points in time, and began to build mathematical models of that. It's kind of taken on a life of its own. I've got a group of 10 people that work with me to gather data on key measures of technology in many different areas, and we build models. And you'll hear people say, well, we can't predict the future. And if you ask me, will the price of Google be higher or lower than it is today 3 years from now, that's very hard to say. Will WiMAX, CDMA, G3 be the wireless standard 3 years from now? That's hard to say. But if you ask me, what will it cost for 1 MIPS of computing in 2010, or the cost to sequence a base pair of DNA in 2012, or the cost of sending a megabyte of data wirelessly in 2014, it turns out that those are very predictable. There are remarkably smooth exponential curves that govern price, performance, capacity, bandwidth. And I'm going to show you a small sample of this, but there's really a theoretical reason why technology develops in an exponential fashion. And a lot of people, when they think about the future, think about it linearly. They think they're going to continue to develop a problem or address a problem using today's tools at today's pace of progress and fail to take into consideration this exponential growth. The Genome Project was a controversial project in 1990. We had our best PhD students, our most advanced equipment around the world. We got 1/10,000th of the project done. So how are we going to get this done in 15 years? And 10 years into the project, the skeptics were still going strong. Says you're 2/3 through this project and you've managed to only sequence a very tiny percentage of the whole genome. But it's the nature of exponential growth that once it reaches the knee of the curve, it explodes. Most of the project was done in the last few years of the project. It took us 15 years to sequence HIV. We sequenced SARS in 31 days. So we are gaining the potential to overcome these problems. I'm going to show you just a few examples of how pervasive this phenomena is. The actual paradigm shift rate, the rate of adopting new ideas, is doubling every decade according to our models. These are all logarithmic graphs. So as you go up the level, it represents generally multiplying by a factor of 10 or 100. It took us half a century to adopt the telephone, the first virtual reality technology. Cell phones were adopted in about 8 years. If you put different communication technologies on this logarithmic graph, television, radio, telephone were adopted in decades. Recent technologies like the PC, the web, cell phones were under a decade. Now this is an interesting chart, and this really gets at the fundamental reason why an evolutionary process, and both biology and technology are evolutionary processes, accelerate. They work through indirection, they create a capability, and then it uses that capability to bring on the next stage. So the first step in biological evolution, the evolution of DNA, actually it was RNA came first, took billions of years. But then evolution used that information processing backbone to bring on the next stage. So the Cambrian explosion, when all the body plans of the animals were evolved, took only 10 million years. It was 200 times faster. And then evolution used those body plans to evolve higher cognitive functions. And biological evolution kept accelerating. It's an inherent nature of an evolutionary process. So Homo sapiens, the first technology-creating species, a species that combined a cognitive function with an opposable appendage. And by the way, chimpanzees don't really have a very good opposable thumb. So we could actually manipulate our environment with a power grip and fine motor coordination and use our mental models to actually change the world and bring on technology. But anyway, the evolution of our species took hundreds of thousands of years. And then working through indirection, evolution used essentially the technology-creating species to bring on the next stage, which were the first steps in technological evolution. The first step took tens of thousands of years. Stone tools, fire, the wheel, kept accelerating. We always used then the latest generation of technology to create the next generation. Printing press took a century to be adopted. The first computers were designed pen on paper. Now we use computers. And we've had a continual acceleration of this process. Now, by the way, if you look at this on a linear graph, it looks like everything has just happened. But some observers say, well, Kurzweil just put points on this graph that fall on that straight line. So it took 15 different lists from key thinkers like the Encyclopedia Britannica, Museum of Natural History, Carl Sagan's Cosmic Calendar, on the same, and these people were not trying to make my point. These were just lists in reference works and thinkers what they thought the key events were in biological evolution and technological evolution. And again, it forms the same straight line. You have a little bit of thickening in the line because people do have disagreements what the key points are. There's differences of opinion when agriculture started, how long the Cambrian explosion took. But you see a very clear trend. There's a basic, profound acceleration of this evolutionary process. Information technologies double their capacity, price performance, bandwidth every year. And that's a very profound explosion of exponential growth. Personal experience when I was at MIT, computer taking up about the size of this room, less powerful than the computer in your cell phone.
Now is the historical moment, the time, not only to fight severe virus, but to shape the system.
We have a unique but rapidly shrinking window of opportunity to learn lessons and reset ourselves on a more sustainable path. It is an opportunity we have never had before and may never have again. So we must use all the levers we have at our disposal, knowing that each and every one of us has a vital role to play.
Now is the time to think what history would say about this crisis. And now is the time for all of us to define our own role. What is it that would make it so that history would look at this crisis as the great opportunity for reset?
The Great Reset is a welcome recognition that this human tragedy must be a wake-up call. It is imperative that we reimagine, rebuild, redesign, reinvigorate, and rebalance our world. Rebalancing investment, harnessing science and technology, and advancing the transition to net zero emissions, all elements of the Great Reset, are fundamental to building the future we need.
The world's problems fit on three sides of a triangle. It's one versus many, man versus nature, and the unfortunate foundation is long-term versus short-term.
We had already income inequality that was fueling income, race, gender inequality. We have a climate emergency, which we can't walk away from. There's no doubt that the very survival of the human race requires us to act.
Any recovery stimulus should have green conditions attached to it. Energy prices should reflect real costs.
You need private sector capital, private sector ingenuity, private sector technology, and private sector capabilities to come to the party. You need enormous trust between the private sector and the public sector for this to actually work.
We have to change our economy dramatically in the next 20 or 30 years, and the next 10 years is absolutely decisive.
The recovery has to be greener than any of the previous recoveries. And in order to do that, we need to ensure that the stimulus package, including fiscal and monetary, are much greener than they were before. So we cannot waste this opportunity to ensure that the very precious money that's raised from the next generation is spent on green and low carbon
solutions.
Young entrepreneurs, especially from developing countries that are there and can see the right problem,
can really step up and create solutions.
Finding profitable solutions to problems of the people and the planet, and we're starting to see firms move to that, and we're seeing firms that behave responsibly in that way actually doing better on conventional measures of profitability and doing better in this particular period.
We've also seen social entrepreneurs step in incredible ways. Not only has it exposed the precarious reality, but then it has also exposed the opportunity to recenter, the reset around the most vulnerable and those on the edge, where it only takes something like a pandemic or difficult circumstances to slide into poverty.
And then we need to couple that with new initiatives to equip more people with the digital skills they'll need, not just to have a tech job, but a job that is increasingly tech-enabled in almost every part of the economy. If we can empower consumers with all of this, I think we unleash this next generation to have a much broader impact more quickly.
We can never again allow our health, education, care systems to be underfunded.
We need our imagination here. Possible is being redefined each and every day right now. So the next time someone tells us that tackling climate change is either too costly or too difficult, I think we need to remind them and remind ourselves of what just is happening right now.
We not only have to demand change, but also create change.
We have to live up to the expectations which we have created, and we will do so.
With millions of Americans suddenly dependent on benefit payments, the pandemic has presented a somewhat antiquated banking industry, to say the least, with a pretty huge challenge. Our next guest, Brian Brooks, the new head of the US National Bank's regulator, says they will need to innovate to keep up. He's granted a banking license to a fintech company, which has raised a few eyebrows, but he's also opened a new avenue for existing banks, allowing them for the first time to hold cryptocurrencies, digital assets, for safekeeping. It perhaps should come as no surprise, as he's the former chief legal officer of Coinbase Global, the biggest US exchange for cryptocurrencies. Brian Brooks, the acting US comptroller of the currency, joins us now. Brian, fantastic to have you with us. I'm really excited to have you on. You sort of have a 21st century view of what the banking sector should look like. And I said it's raising a few eyebrows. It's raising a few more. Give me a sense of what your vision is.
Well, Julia, thanks so much for having me. And these are really important questions to ask in a time like this. You know, this is a time when Americans are depending on their banking system more than they ever have before. When we made a decision collectively in this country to shut down the economy very broadly back in March, we depended on the banks to deliver benefit payments in the form of Paycheck Protection Program loans and checks sent from the Treasury Department. And the problem is we were sending those across 19th century banking rails. Many people said that it took days or sometimes weeks to receive their payments. And my vision is that we need to get to a place in this country where payments can be transmitted virtually instantaneously, where errors can be eliminated. And it turns out technology exists today that can help us do that. So we need to get there, I think, sooner rather than later.
You've talked about a new payments charter. What does that mean? And what is the technology that we have today that exists that circumvents, to your point, the 19th century rails that the train has been running on so far?
Well, it's really interesting, Julia. If you look at the payments business over the last 30 years, there was a time when all payments happened through the banking system. And in the last 10 or 15 years, with the rise of fintech, largely dominated by a bunch of Silicon Valley firms, it turns out that technologies exist, whether they're based on blockchain or other kinds of networks, that allow payments to go much faster. And as a result of that, what's happened in this country is that millions and millions of daily payments no longer are principally processed by banks. They're run by companies like PayPal and Stripe and Square. The question for the payments charter is, do we think it's a good thing or a bad thing that all of that activity is now happening outside the banking system, where the examiners who work in my agency can look at them and make sure that there's fraud being prevented and make sure consumers are protected? Or do we think it would be better for them to run entirely outside of regulation? I think the best solution, which you see in other parts of the world, including the UK today, is to have faster payments that are innovated by private companies but are supervised by federal watchdogs like us. That I think is what the future looks like.
I mean, the pushback that you're getting here is from existing banks, whether at the state level or those that are federally regulated. I mean, they have existing businesses, I guess, to protect. The problem is they don't best serve the customer.
Well, that's the thing, Julia. And if you look at what the reason is why so much payments activity has moved outside of the banking system, part of it is because consumers want to receive their services in a different way. I mean, let's face it, there was a time when we all used to buy our clothes in department stores where we could also get our oil changed and have lunch. The world changed on the high street shopping market, right? Now we all go to boutique stores. We buy our computers at Apple, our jeans at the Levi's store, etc. Banks are sort of the last bastion of the amalgamated comprehensive supermarket, if you will, of financial services, but that's not the way consumers shop anymore. The other thing that's really important is markets look at these companies very, very differently. So it turns out the return on equity for startup tech companies is far higher than the return on equities for banks, which is what creates strong market incentives for these services to move into specialty platforms and outside of comprehensive banks. All of which means that if we don't rethink what the bank charter is and find a way for the bank charter to be broad enough to encompass services that were historically provided by banks, we're going to have a problem.
SWIFT. Some people will recognize this term, others won't, but it's the way right now that the system works and the information, the money is passed between banks, and the last thing it is SWIFT. It's clunky, it's slow. Those outside of the industry, particularly in the fintech sector, know there are better options. Brian, is this the plan to replace, improve on the existing infrastructure that SWIFT is at this moment?
Well, Julia, you make a great point that SWIFT is one of the most ironically named organizations in the world. The joke in my world is that if you wanted to move money from America to Australia, the fastest way to do that is to load it in a suitcase and put it on an airplane, which is a little bit crazy in the US, right? So to me, what has to happen is there are faster solutions, and they exist in other parts of the world. So the UK, Singapore, China, many of our global competitors have adopted real-time payments. In the US, that seems to be still years away unless we allow existing technologies to do the work for us. And I think that's very possible.
Brian, how quickly can you do this? How quickly can you achieve this, given, as we've discussed, there are existing resistant points, and they're pretty powerful in this country?
Well, they are, Julia, but in the world, there's nothing more powerful than markets, because markets represent what millions of consumers want every day. And so my job is not to build new payment rails. My job is to identify impediments that make it harder for people to get what they want and need. And at the OCC, we have an ability to do that. So among those include the questions of, should banks be allowed to participate in the cryptocurrency market at all? Should banks be allowed to connect to blockchains? Should we have central bank digital currencies, perhaps issued by private companies, but backed by bank deposits? I can identify what the impediments to that are and try and solve that so people can get what they want as they express through markets. I think that's very possible.
Brian, very quickly, I read recently that 15% of Americans now own some form of digital asset or a cryptocurrency. You also want to tackle this and make sure that banks can provide services as far as digital assets are concerned. You're trying to protect consumers again.
Well, look, in a world where 50 million Americans do hold cryptocurrencies and many, many millions more outside of this country do, to me, we can't ignore that phenomenon. So I am not a crypto bull nor a crypto bear, but I recognize reality. A lot of people have this stuff. They have it for good reasons, and we need to make sure it's accessible to them in the same safe and sound way that they can get their checking account. So that's our role, is to innovate as people change the way they consume financial services in the future.
Yeah, I have to say, I find you a breath of fresh air, but I can see you're going to be a whirlwind to others. Brian, we will continue this conversation. Thank you so much for describing your role and what your plans are. We'll continue this conversation soon. Brian Brooks, Acting US Comptroller of the Currency. Thank you for that.
1, 0, ignition, and liftoff of the Falcon 9. Go Starlink.
Stage 1, caution down.
a successful liftoff of Falcon 9
Power
from
telemetry
Space
nominal.
Launch Complex 40 for this 11th Starlink mission. The 3 Planet SkySats and our 58 Starlink satellites are on their way to space. In about 10 seconds, we will be approaching max Q. Merlin engines are now
Vehicle
throttling
supersonic.
down as they anticipate the moment of greatest aerodynamic pressure.
Max Q.
All right, we just went through max Q, and the vehicle is now supersonic. And Merlin engines have throttled back up. So coming up in about a minute, we'll have 3 events happening back to back. First will be main engine cutoff, or MECO. This is where all 9 Merlin engines will shut off to slow the vehicle down in preparation for the second event, stage separation. This is where the first stage separates from the second stage, with stage 1 starting to make its way back to Earth for landing, while second stage will kick off the third event in this sequence, SES-1, or Second Engine Start 1. This is where that Merlin vacuum engine will ignite and begin to propel the second stage along with our payloads into orbit. Main engine cutoff coming up in about 20 seconds. Everything continuing to look nominal for stage 1. And before we went for a break, we saw the successful deployment of the 3 SkySat satellites for our customer Planet, which were ride-sharing along with Starlink. These 3 SkySats will be joining the 18 already on orbit and will complete Planet's fleet of 21 satellites and make it the largest high-resolution fleet of satellites in orbit to date. So here in just a couple of seconds, we will be deploying our 58 Starlink satellites, which will be joining the nearly 600 that are on orbit. Now, there is a chance, and it looks like I was just going to say that
Starlink tension rod separation confirmed.
we have an expected loss of signal over our ground station. There we go. We can see the visual confirmation of Starlink deployment. Like I said before, those 58 Starlinks will be joining 600 that are already on orbit, and shortly they will be deploying their solar arrays. Over the next few days and weeks, they will distance themselves out using the momentum created by the second stage.
Maneuver complete.
Like I said, we spun it along its central axis to provide the momentum required for those satellites to space out, as you can see there. So they'll be using their onboard ion thrusters to make their way to their operational orbit of 550 kilometers above Earth, and we'll begin to start beaming down high-speed internet to us Earthlings.
One of the main topics up there was cryptocurrencies and all sorts of companies now getting into this effort, not least among them Facebook. What kind of threat does this pose to the traditional banking system?
Well, I think you have incumbents, the banks, commercial banks, and you have the disruptors. And clearly the disruptors are having an impact on the incumbents. We just heard a very large systemic bank here saying that they're launching their digital coin, currently piloted in a way within the institutional clients, but to be scaled beyond that. We heard from the European Central Bank that they have launched in November something that is called TIPS, that enables all the banks in the Eurozone to actually transfer instantly at virtually no cost money between them. So I think the role of the disruptors and anything that is using distributed ledger technology, whether you call it crypto, assets, currencies or whatever, and it's far from the bitcoins that we used to talk about a year ago, that is clearly shaking the system. The voice that we heard, which was, I thought, really interesting, were those of the regulators and central bank governors who said, well, yes, this is good and this is helpful and it is changing the business model of commercial banks. But we have to be mindful of 2 things, trust and stability of the system. And we are equally concerned, we at the IMF, about stability. We don't want innovation that would shake the system so much that we would lose the stability that is needed.
And are regulators doing enough right now to ensure that stability and as well competition from some of these big tech companies being involved in this space?
You know, I think they're mindful of wherever the competition is coming from. The central bank governor of Kenya was explaining to us that they gave a banking license to a telecom company. And I think in the future, we have to look at what lots of data collectors and movers are going to do and whether they're going to move into the banking space forcefully, in which case they will have to be regulated. They will have to be held accountable so that they can be fully trusted.
Madame Lagarde, I know you have a tight schedule. Thank you for joining us here on Facebook Live. We always love to have you, and our viewers are certainly happy to see you back with us. Thanks so much.
CEO Brett Gullinghouse, he joins us right now. And you know, David, some say Ripple could be the next Bitcoin. What do you think, Brett? Is that a compliment that Ripple could be the next Bitcoin?
Well, I think if we're solving a real problem and it's at scale, then I think it's a compliment. I think the most important thing that is going on in crypto is understanding what is real and what is just hype. Some, I think, may look back on Bitcoin and find that it was the Napster of digital assets. What I mean by that is Napster was the first to digitize music and demonstrate, hey, if you digitize music, you can do a lot of cool things with that. But ultimately, they were circumventing trademark laws, they were circumventing royalty payments, and government stepped in, and Napster was not successful. But Spotify, iTunes, Pandora, they were very successful. I think what you'll find is that maybe the next generation of digital assets ends up solving some of the original problems that Bitcoin set out to solve.
So RippleNet is trying to take on SWIFT. What's been the traction like? Who's come on board?
Well, it's interesting as you step back and look at this. If you and I decided we were going to send $10,000 to California today, the fastest way for us to do it would be to drive to the airport and fly it there. That's a crazy thing to think about when you're in the age of the internet and we're used to information on demand. When we think about the customers that have come on board, it's because we're solving that real problem. We're changing the nature of a payment taking days to settle to California to seconds.
So this next question actually is good from almost a foundation setting, and we have Ripple, we have Ripple Labs, Ripple the company. What's the difference between these different entities or products? In other words, how does XRP, how is it different than Ripple the company? Maybe you can just talk about the interrelation between these different parts.
Sure. So I mean, Ripple and Ripple Labs are the same. I think originally when the company was started, it was before I was at the company, it was called Ripple Labs. We've standardized on, we're Ripple. Ripple owns a digital asset called XRP. That XRP is fundamental and intrinsic to how we think about solving a payments problem. The XRP ledger is open source technology that lives out in the universe. We obviously invest in that open source technology. We will continue to do that. I actually think one of the unique things about the position Ripple is in is the fact that we can invest in the XRP ecosystem. Mm-hmm. And frankly, we will invest in the whole ecosystem, the blockchain ecosystem. I agree with some of the things said on one of the panels yesterday that said that we are in the earliest stages of a transformative change in how transactions are managed. Mm-hmm. I want to see the whole category grow. Right. I don't view a lot of these companies as competitors because it's so early that look, we're trying to solve a payments problem, and there's people working on securities and identity and lending, and I love it. I want all boats to rise, and I think that's a good thing. But for us, we're going to invest in the XRP ecosystem. We're investing in the broader ecosystem. We certainly want to see XRP become even more liquid, and I think as we drive adoption, that will happen. This isn't one of the questions, but I want to proactively comment on something. One of the things I say inside the company is I'm not focused on the price of XRP over 3 days or 3 weeks or 3 months. Mm-hmm. I'm focused on the price of XRP over 3 years and 5 years. Mm-hmm. I have no qualms saying definitively, if we continue to drive the success we're driving, we're going to drive a massive amount of demand for XRP because we're solving a multi-trillion-dollar problem. Mm-hmm. These payment flows are obviously very, very large. And to the extent we continue to drive success of signing up more banks, introducing them to how we can solve not just a connectivity question with XCurrent, but a liquidity problem, a multi-trillion-dollar problem around liquidity called XRapid. I'm very confident about that longer arc of time.
If I understand correctly, MoneyGram is actually using XRP in its transactions, which marks a big evolution for you because there are some financial institutions who are using Ripple but not actually XRP. Can you explain how that evolved and how that's going?
So I think, a lot of times, I talk about the more than 200 banks and financial institutions we're working with, most of them sign up and engage us on a fiat to fiat basis. Dollar to yen, dollar to Mexican peso, dollar to Argentinian peso. And that's because that's how the correspondent banking network works today. In effect, some people describe what Ripple's original product and initial product is called kind of Swift 2.0. Swift is what correspondent banks use for messaging to debit and credit the pools of liquidity. And when I say pools of liquidity, I mean like pre-funded accounts. The Bank of Jen and the Bank of Brad would have accounts at each other's banks, and you might be Mexican peso, I'd be dollar, and we debit and credit those with messaging. That works if the accounts are pre-funded. And what we have found is there's more efficient ways to manage liquidity. If you as a bank don't have to put money at my bank and I don't have to put money at your bank, I can use that money for other things. It's working capital. MoneyGram, as an example, has several $100 million of negative working capital in a public company. That's material to their business for sure. If by working with them, they can reduce the amount of pre-funding, that is very accretive to how they think about the use of capital and what they can do with that if they didn't have that negative working capital out there.
You want to take one? Go for it. The first one's for you. IMF. Do you see IMF holding crypto assets in the future? I did not put that up there.
Remember, I'm from the legal department. I'm supposed to be very conservative about these things. I don't want to go into great details about
Maybe I should take what the IMF is going to do. I think we stunned Ross into silence with that one.
For that to happen, okay, under the current legal framework, some country would have to use a crypto asset as its currency.